Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of US markets and trying to decipher exactly which way they are heading. Okay, this is a video being brought to you by CFDs.com. Be sure to visit www.cfds.com for your trading needs. They are the specialists in spread breaking and CFD brokerage, and you can apply for that 25% bonus offer. Alternatively, you can visit cfds.education to certainly learn more. Okay, now in terms of US markets, now the narrative obviously overnight, the Asian markets more or less mixed, with the Nikkei obviously down, Shanghai more or less flat. Although we did have stronger or stronger Chinese data out overnight, we had stronger obviously German consumer confidence as well. But Mr. Nott's comments obviously are hurting the Eurozone, and obviously are hurting the actual QE based rally as well. And the obviously European markets failing to move higher. Now we have the stronger economic data out of the UK as well. Now the main obviously narrative, or the main concern, is the housing data. Now existing home sales actually plunged and missed expectations, and that certainly has been hurting sentiment in the US markets and failed to lift the US markets. I obviously, and subsequently European markets, have been floundering as well. Now we have GDP that actually came out in line, more or less, the German GDP or the US GDP from a Q3 perspective. Now the annualized came out at 2%, so slightly better than expected. Personal consumption expenditures 1.3%. It was a core personal consumption that actually came out slightly better at 1.4%, and that was the main argument for my bullish trade to certainly move higher and close the gap on the Nasdaq, which I'll shortly discuss. Now, Red Book Index certainly came out better than expected. The house price index came out better than expected, but the actual existing home sales data certainly is hurting the market, and obviously that doesn't bode well for consumption going forward. So again, it's a cause for concern, and obviously with a rate rise environment as well in the backdrop, that doesn't bode well. Now let's try and see exactly where these markets are heading at present. Now let's bring up the chart of the Russell first of all. It's a leader, not the laggard, so let's just bring that up and see exactly where we stand. Actually, the Wilshire will be a good index to gauge strength. Now let's go to the daily chart itself. Yes, we have bounced off the horizontal support level. As such, we are obviously, we've taken out this support, so that certainly is a key. That pivot low obviously has held, as you can see here, but we're still trading within this red candle, which was registered on the 18th, and therefore price action remains bearish. In terms of the actual movements lower, yes, we do have lower lows and lower highs, but it certainly does seem to be coming to an end here with this move or potential move here. Now the market has actually put in a potential double bottom and obviously has held horizontal support here. So whether or not we go back up and test this 2130 level or 21,300 level is another question, but we certainly are putting in a potential base here in order to be propelled higher. So the Russell itself, or the Russell, the Wilshire 5000 certainly is giving you a bullish pattern here. Okay, now let's bring up the 60-minute chart of the Wilshire. Yes, we've obviously bounced off double bottom support, and whether or not we're obviously recoiling here, and whether or not we can sustain this move is another question. Now we are coming into 200 MA resistance, so therefore you are expecting turbulence in the interim. Potential pullback here going into the close certainly looks likely, and that obviously does not bode well for European equities either. So something to certainly consider. Let me just bring up the RSI. This doesn't have volume, which is a shame, so let's just quickly, let's just quickly have a look here. My charts are never being saved. I'm not sure why. I'm always having to fiddle each time I do these videos. So the RSI certainly in a 10 minutes certainly seems to be overbought, and it's not exactly a good sign or trigger to potentially load up on longs here. So again, some caution needs to be warranted, especially with regards to that weaker housing data causing damage to sentiment to a large extent. So again, something that we're going to observe and remains a concern. Okay, now let's bring up the chart of Russell now. If I can find the Russell chart, bear with me. Oh, here we go. So Russell, this is the IWN, not the IWM. I need the IWM. Oh, here we go. Okay, so this is a Russell. Let's just see exactly where we stand here. Okay, it certainly doesn't have the RSI on, which needs to be added. Okay, so certainly volume is more or less non-existent. Okay, so obviously that favors the upside, so again it's a potential bullish pattern. This is the actual daily chart first of all. Let's just bring that up. Now we are putting in a potential bottoming tail. We've held gap fill, so Russell certainly remains bullish from my perspective, and certainly argues for a move or a thrust higher. How high, again, that's going to be debatable. Let's just shift over to the 60-minute chart. You do have this unfilled gap here that needs to close. Okay, so certainly a thrust higher up to that gap certainly is something that I'd expect. Okay, looking at a 10-minute chart, you'll see much more clearly. Yes, we have bounced, but we are now facing some turbulence. The HNS obviously was certainly played out very well, and it's all about that gap level now from my perspective. Although there is a gap, unfilled gap below, so again, housing data can certainly cause that to close, so obviously bear that in mind. But the Nasdaq certainly is very, very weak, which is again it's a cause for concern. The Nasdaq generally is an index that leads, doesn't lag, and mainly that's due to the fact that the DAX has been so weak today as well. That could be may well be the reason for that, for the lag there in the Nasdaq itself. So again, something that I'm going to be watching going into the close. So yes, the actual Russell certainly is coming into resistance. So again, remain vigilant. Okay, with regards to a reversal or a pullback there. Now that doesn't bode well for the S&P 500. So if I just bring up the chart, the S&P 500, again it's light volume, so bear that in mind, and you can float higher, so there is a high probability of that happening. Still an inside bar with regards to the actual candlestick formation, so still consolidating with that bearish trend. We are now coming into previous support equals resistance. We have rallied impressively, and given the fact that the Nasdaq has failed to follow, certainly is not a good sign. 60-minute or 10-minute chart itself is now coming into resistance, so given the fact that we have factored in the good news in terms of stronger GDP, stronger consumption, etc., it certainly seems that we are now coming into resistance and looking for a potential thrust or a move lower. And obviously, given the fact that the Nasdaq is the weakest link at present, that certainly seems to be the first index to certainly fall from my perspective. So certainly, again, are we looking to potentially short the Nasdaq? I have actually closed out my Euro stocks and Nasdaq longs that I had for +7 after having watched them trade sideways for absolutely ages. Okay, so I'm out of that now. We're looking for a potential move lower now from my perspective, because it certainly is weak, the US indices. Okay, so the actual move higher here from the 2020 to the 2033 level certainly has factored in the actual bullish news from the GDP and personal consumption Red Book index. Okay, and the Philly Fed non-manufacturing data, but the weaker home sales certainly will be a drag. Okay, so that's the S&P sort of organized and accounted for. Let's have a look at the actual Dow transports, because that's a major concern. You can see that we've broken below the lows. We're consolidating within that red candle, and it looks like we are going or are on the verge of breaking to new lows. As you can see here, the low has been cracked. The 200 MA certainly seems to be the next target on the Dow transports. Again, that's a bearish sign. It's not exactly good news. Okay, in terms of the semiconductors now, let's just look at the semiconductors. Again, certainly indicating weakness. No real support now seen until this next bastion of support, 52. So not exactly a good sign, and it's a doji candle at present. The Biotechs, again, no real convincing rally at present. Certainly remains weak in the daily chart. So the Nasdaq itself will more than likely be weak, and that's exactly what we're observing right now. I did expect the gap fill to close at the level above, at the 45.98 level, but that obviously hasn't been the case, as we seem to be stuck at this key resistance zone, which is around the 45.80 level, and we are now looking at potential new lower low. Again, we'll see whether or not the market gets to 45.60. I may well be tempted to go potentially long, because this inverted head and shoulders target certainly does remain. So that's something that I'm going to be keeping a keen eye on. But for now, looking to potentially short the Nasdaq to potential 45.60. That's what my bias will be, or potentially lower back down to this previous resistance equal support, which is at 45.50. So again, it's a tricky one. Okay, it certainly is tricky given the fact that commodities obviously are into resistance, dollars into support. It certainly needs to be weighed up. Okay, especially with regards to euro moving higher as well. So given the fact that the Russell is weak, the S&P is weak, then the Nasdaq will certainly follow, given the fact that Dow Transports is weak as well. So you're trying to weigh up all the arguments, okay? Now, in terms of the VIX itself, the 10-minute chart on the VIX now is coming into potential support. You do have an unfilled gap above that needs to be closed. and given the fact that you have the actual housing data certainly causing some concern, it certainly looks like the VIX will certainly start to rally from here and obviously cause the equity markets to depreciate. Okay, so certainly take that into consideration as well. Now, oil prices obviously have rallied. I did expect that to happen, and it now seems to be into potential resistance, and certainly is struggling to move higher. So again, that doesn't bode well for the equities market either. So again, take that into consideration. Okay, when reviewing your trades. Okay, so iShares we've covered, the S&P we've covered, the Nasdaq we've covered. The emerging markets itself, it certainly has held that gap fill ever since then. It has attempted to bounce, and it certainly needs to be observed further. Now the yen itself, let's bring up the daily yen. The yen itself, ever since the BOJ has disappointed, the yen now is potentially into support, is holding this base here, which obviously doesn't bode well for US markets when the yen starts to appreciate. Now financials still remain weak. You can see here now we did attempt to rally earlier today, but we are now back into resistance on the financials. So again, it's a cause for concern. Okay, the financials remain a cause for concern. Energy sector, again, just holding on to dear life, even though the oil price certainly has moved higher. It's failed really to project a true rally onto the actual energy sector itself. Home builders, again, will be feeling the effect or weakness of the existing home sales data. So again, that's something to observe, and there will be the real sector that will send us lower. Okay, the consumer staples, again, it has been a green day or bullish day, but we are now coming into potential resistance. We have gap fill resistance up here, and a 10-minute chart certainly does indicate resistance as well. So again, something that we're going to watch out for. So previous support equals resistance up here. No, but it's all about that gap. That gap certainly needs to be filled. So certainly observe and see how that trades. Utilities remain weak, so no real index that you could say outstandingly that's showing support or is putting up a potential bullish pattern. All of them look certainly look weak, and that's why you're seeing the S&P 500 show weakness too. Okay. The 10-year, let's just quickly look at the 10-year and see exactly where this is positioned. The 10-year itself has obviously been moving lower given the economic data, and that obviously has helped the dollar to a certain extent. But the 10-year now is potentially coming into support, so you could see some dollar weakness. But on the dollar chart itself, you do have gap fill support, so we shall see whether this continues to fall. Given the fact that we have put in a triple top here, biases for a further decrease or decline back to this previous resistance equals support level, given the fact that we did have a potential IHS. So again, that's something that we're going to observe going forward. Again, it's a mixed picture right now. It does look as if we are going to trade sideways going into tomorrow, but anything's possible in this equity market, so always have an open mind. That's my understanding and perspective thus far. Okay. Now again, going back to the S&P 500, it certainly is indicating that we are looking at potential weakness here. The move here has factored in the bullish argument on the GDP and consumer consumption data, and now we are looking for a potential move lower. So again, be open-minded, especially with regards to the Nasdaq, because the Nasdaq is showing immense weakness at present, along with the Dow. Okay. Be sure to visit cfds.com for your trading needs, and certainly take up that offer. Goodbye now.